Keeping on top of your investments can be hard. Fortunately, there are some simple tricks that make things a lot easier. A good starting point for reviewing your portfolio is InvestSMART's free Portfolio Manager. As an investor, you can enter asset details and specific investment goals, with the Portfolio Manager calculating an asset allocation ratio that's tailored just for you. It largely depends on your risk appetite. In terms of risk, InvestSMART believes there are 4 types of investors: conservative, balanced, growth, and high growth. To put this in context, a conservative investor equates risk with danger, while a high growth investor will accept a very high level of volatility. But even if you consider yourself conservative by nature, it's your time horizon that matters too. If you're planning to invest for more than 10 to 20 years, historically, equities have far outperformed fixed interest and cash over the long term. Strip the strategy back to basics. Plug in your risk profile, record your current holdings as assets and liabilities, and then get an overall health check score. Why not just use a spreadsheet? Well, the Portfolio Manager is far superior, producing a streamlined snapshot that's up to date. The tool pulls in all your dividends as they're announced to the market, the compositions of any managed funds, and your property data. Under the Portfolio Manager, you can also click the settings function to add multiple portfolios. For instance, as a younger investor, you may have an SMSF that is geared for high growth, while simultaneously running a separate balanced portfolio as you save for a house deposit. For each portfolio, your health check score indicates how much you are overexposed or underexposed to asset classes compared to target allocations for your specific risk appetite. A score lower than 75 to 80% indicates the portfolio lacks diversification. Often, a lumpy asset like an investment property will skew your score. Other times, it'll be the fact that you are heavily exposed to Australian shares, with very little in your international bucket. Plus, a portfolio can easily lose its balance in extended bull and bear markets. So it might be time to clip or cut underperforming or even outperforming investments. However, the goal isn't to maintain a health check score of 100%, as this would require constant rebalancing, which would only chew up brokerage. Maybe you want to simulate changes to your portfolio before making them, and that's understandable. You can simulate removing an actual investment to review your portfolio performance over a certain time frame. Do you have a couple of managed funds? InvestSMART provides a tool that compares the performance of your funds, so you can do this before taking any action. InvestSMART believes asset allocation is a key driver of investment returns, playing a much larger role than individual asset selection. And the Portfolio Manager was built with this top of mind.